Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the medium time frame with the bullish scenario, where we're looking for a 5-wave impulsive structure to the upside, where wave 4 is finished, and we look for this wave 5 to end somewhere in this target area over here, between 46.1k and 55.6k. On the lower time frame, this is then what we're looking for: a finished WXY and then a flat W, X complex, and wave Y, a triangle for wave 4, and then we're looking for wave 1, 2, and continuation to the upside. The most common target for a wave 2 is the 0.5 to the 0.786 Fibonacci, taken from the low to the high of wave 1, which, as you can see, has been respected at the moment. And if we then look for a target for wave 3 to the upside, then usually the minimum target is the 1.618, taken from the low to the high of 1 to the low of wave 2, which is sitting at 51k. Now, what is important in this scenario is that locally the 886 has been touched, taken from the high to this low over here. And the fact that the 886 is touched increases probabilities that this high is a wave B or a wave X, increasing the probabilities any move down here is a wave C or a wave Y, which then in turn increases the probabilities that sooner or later price will take this high over here. The invalidation of this scenario is price taking out this low. If we then go to the medium time frame bearish scenario, then we are looking for wave 5 already in. We're looking for 1, 2, 3, 4, 5, where wave 5 ended between the 1.236 and the 1.618 Fibonacci, taken from the high to the low of this wave 4, where in this scenario your wave 4 is finished after a WXY, with wave Y not being a triangle but a zigzag this time. In this scenario, we are then looking for the high of 5 over here, and now a impulse to the downside. As then, of course, we're looking for a much bigger correction to the downside, because it is the end of a long trend to the upside. In this scenario, we are then looking for this move to the downside to be a wave 1, followed by a corrective wave 2, before then continuation to the downside in a bigger wave 3 for much lower prices. The problem, however, in this scenario is the touch of the 886. The 886, again, it is a rare target for a wave 2, common for B or X, increasing probabilities. The move down is the C or Y, which increases probabilities to take the high. So for this bearish scenario, it's not great that this wave 2 touched the local 886 here on the chart. Also, if we go to the 15-minute, then you can see that this candle to the downside in the wave 1 is very sharp. It's basically one 15-minute candle, and preferably when we think about a wave 1, we get at least a bit of a solid impulsive structure. These type of structures do tend to have a higher probability of being wave Cs compared to impulsive structures. If we then go to my 886 folder, I just want to show you that probability in real life, basically, where we have a clear high, you pull a fib from the high to the low, 886 touch, and you move down, higher probability C or Y, coming back later. Same over here as well, but this is not the first time. This happens over and over and over again as well. Lower high on price here, 886 touch, bit of a move down, later it grabs the high. And I have more of these examples. This is quite an extreme one, where we had a leading diagonal here, and the 886 is a target for a leading diagonal as well, but then sooner or later price took out the high. Now this, of course, is also common. I don't have all of these on my chart, where you have a clear clean high, take from the high to the low, the 886, bit of a range, right, and move to the upside. Also, something that is very common is after hitting the 886, price likes to retrace to the golden pocket before then potential continuation. That's something that you see quite often as well. Here another one. From the low to the high, 886 touch. We have a bit of a bounce over here, again to the upside, reaching that golden pocket before then eventually taking the low. And there's a few more. You know how it works. Lower high, 886 touch, move down, eventually back up, takes the high. Same here, hits the 886, eventually it takes the low. Lower high or a move to the downside, 886, it just continues, right? So yeah, knowing about the 886 is just good to know in your Elliott Wave knowledge, as there is more examples here on my chart as well. If we then go to the CVD divergences, then we do have some bullish CVD divergences here that didn't yet play out as the target is this high. Last night we did have during the live stream bullish CVD divergences here. These have played out as the high was taken. We had a bit of bearish CVD as price moved to the downside here. This also already played out because the low here was taken, so that's very nice. That is now neutralized. If I go to the 50-minute chart, then what we are looking at the moment is the bullish CVD here, right? You had over here a higher low in price, and on blue a lower low. Now it's a bit more extreme with this move to the downside. You can see how CVD moves down. So the bullish CVD got a bit bigger here, and also of course now locally higher low in price, lower lows on the CVD. Besides the ETF news last night, we also have some news today at 2:30 p.m. Central European time. So make sure that around these times you trade safe as volatility might kick in. Besides the ETF news last night, we also have some news today at 2:30 p.m. Central European time. We have some red flags over here, which increases the probabilities of volatility on the chart during this time. So make sure that you trade safe around these hours. And before I go into the probabilities, I also want to show you the resistance and support areas here, where the closest support is 43.8, 44k, then down here 41.9 to 42.3k, and above price we have 48.7, 49k, 50.7, 50.9k, 53.3k, and then over here 56.8, 57.2, and then finally 60.1 to 61.5k. If you then look at the probabilities of the different scenarios, then on the medium time frame as well as the low time frame, we are looking for this high to be taken sooner or later because of the 886 touch over here. Any move down from the 886 has a higher probability of being corrective, not impulsive, which therefore in turn increases the probabilities to take this high sooner or later. So I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.